Hello and welcome to another episode of the AgeTech Podcast. My guest today is Marmik Mankodi from Blume VC, which recently published this fantastic report, the Eldercare Blueprint, which is one of the more in-depth analysis I've ever read about the opportunities available for AgeTech entrepreneurs out there, specifically in the Indian market, which is one of the most exciting opportunities right now. We also have a video about that, which I will either put right here or right here. But right now it's time to start the podcast. Marmik, welcome to the show.
Hey, hi Karen, thanks for having me.
So I would love to start by just you introducing yourself and the fund so we can get a better sense of the backstory of both.
Yeah, sure. Hi, I'm Marmik. I joined the investment team at Bloom around 9 to 10 months ago at the time of recording. But yeah, prior to joining Bloom, used to work in a bunch of startups in India and Southeast Asia where I used to look at revenue, which is user acquisition, retention, product-led growth. That's been my background past prior to joining Bloom. And at Bloom, I look at our investments in consumer apps, education. Consumer apps include and consumer services, including Eldercare.
I feel like there is a strong overlap between many of the startups in our ecosystem because many of them start as hopefully startups hoping to become direct to consumer startups. But obviously that is a huge challenge for startups and it also requires a lot of funding. So maybe can you give us some examples of startups that you've invested in the past in the eldercare space that have done really well in this?
We've only invested in one startup in the Eldercare space, which was Khyaal. That's about it. And it's done significantly well.
Can you walk us through the process of investing in Khyaal? So what made you, first of all, get excited about this startup and this opportunity, and what made you eventually invest in them?
For sure. So full disclosure, we invested in Khyaal much before I had joined Bloom. But I went through the notes. What excited us was the fact that they were building a community, right? Like right now, they have more than 1 million users who engage with the app at some point. And the engagement leads to them transacting via travel, via memberships, via marketplace that has been curated for the elderly, right? So it's like a digital community, like a digital hangout spot, right? What Clubhouse was 2 years ago, but for the elders. So that's what really got us excited.
And for the fund in general, is the fund able to invest internationally or are you only investing in Indian-based startups?
Yeah, so as a fund, I was supposed to answer that earlier, but we tend to make $2 to $3 million investments, up to $5 million, for companies that are based out of India. So that's a constraint that we have. Or let's say an Indian founder who's building for the globe.
Perfect. So in this report that you published this year, the Eldercare Blueprint, which, by the way, I encourage everyone to check out Blume VC's website, search for the Eldercare Blueprint, and really go through it. It's one of the most thorough documents and reports that I've ever seen any VC put out about this space. You mentioned that there is an opportunity because lots of younger Indians are moving abroad and they have to become remote caregivers. Can you tell me more about how you view this opportunity?
Yeah, sure. So it's not just Indians view traveling abroad, they also travel within the country. So let's say I grew up in a smallish town, now large, called Ahmedabad, but I'm currently based out of Bangalore, right? So a lot of people, they move away from hometowns and to metros in India. Apart from, let's say, a certain diaspora that goes abroad, right? I think our research indicates that around 1.2 million Indians immigrate annually to study for masters, and around 2.5 million Indians immigrate per annum, right? Just like that, right? Which includes the 1.2 that I mentioned earlier. This leads to, in our head, at least 8 million households that require remote assistance, if at all. Because there's a sense of guilt when you move abroad, because being Indian, there's this cultural value of caring for and looking after your parents, right? So there's a guilt associated to not being there for them, which I think is very Indian in nature, right? Which is why we think that there's a large opportunity and a revenue pool in this space.
It makes a lot of sense for sure. And you also mentioned that there is a significant increase, or there was a significant increase in tech adoption for urban elders. in India, especially since COVID. Can you share a little bit about how you were able to gauge the market? Because you also have an estimate in your report that the entire market is worth around $740 billion. And I feel like gauging the market is something that many startups struggle to do. Can you share a little bit about your methodologies, maybe, of how you did it?
So I want to break this into various segments, slices and dices. How we went about it was A, looking at number of Indians that live abroad. B, looking at, let's say, a estimate of number of Indians that don't live at home. With respect to digital penetration, it's very straightforward. Everyone uses WhatsApp, and WhatsApp only works on smartphone, right? So it's about making something that's as intuitive for an elder as WhatsApp can be, which is a primary mode of messaging across India. So the way we went about it is we looked at where the revenue pools lied and the estimate number of paying customers, right? Which could be families or individuals, right? Let's say if I had to take about elder travel, then the key decision maker in our head is an elderly couple who has made enough money, what we call WOOPWHIs, well-off older people without any health issues. So they take their own decisions for travel with respect to how they want to indulge into things. And the second part is the caregiving, where the kid or the child is the primary decision maker. So we went through that exercise of going through where do parents take a decision and where do children take a decision. What is the addressable market for that, which can be taken by, let's say, income demographics, right? And then extrapolating into the average ticket size into that sector and then coming across or coming to that number.
So I love that you came up with the WOOPWHI. I wasn't sure how to pronounce it until you just said it. The WOOPWHI
Yeah.
is the sweet spot for startups. So well off older people without health issues. And I think that is a very important point that you made in your Eldercare Blueprint, that despite the fact that the challenges of aging are universal and startups, there is so much for startups can do, for consumer startups, they are better if they focused on consumers that are particularly well off. Can you share a little bit about how can a fund with a consumer focus, how can a fund help startups be strategic and I guess accelerate their path to product market fit? Because we know customer acquisition is expensive in any space, and perhaps even more so in this space.
So look, my colleague Sajid, he breaks down product market fit into two parts. One is product to problem fit, and second is motion to market fit. Product to problem fit is, does your product actually solve the problem that it's supposed to solve, right? And motion to market fit is, now do you have a GTM motion that makes your product propagate in a cheaper manner, right? In a efficient way. So the way a fund can really help a startup is just figuring out the PMF path, right? Like how do you get users at the lowest CAC? Is it by a core insight or is it by differentiating the product, or is there any juice left in the marketing funnels or with respect to your PPC campaigns, so on and so forth? And with respect to tracking metrics that sort of give an indication that your product's well loved, right? Like most of the metrics are very common, like your net promoter score, right? Which is how likely are you to refer your startup to a friend, and the higher net promoter score means that your service is good. But the discovery into what brings in a higher NPS is a place where VCs can help, because they objectively look at the business probably once a week or once a month or once a quarter, depending on the cadence that has been set. It helps the founders also zoom out and be more objective about stuff. That's how I think of it.
It makes a lot of sense. Do you see a difference in consumer startups that are targeting the general population or younger generations versus consumer startups who are targeting the older population? Is there a difference, let's say, in the marketing channels that they might use, or even in the customer acquisition costs?
At this point of time, no, not really. The marketing channels are still very eerily similar, especially for digital platforms. But when you speak about care, a facility, a senior care facility, we do see that startups or companies, institutions tend to market to the children, right? Which who might or might not be living in India, right? So there's a lot of word of mouth and organic pull for those places which are more physical in nature, where let's say a parent is living in a facility. as opposed to a digital space where the marketing channels are very similar to any other consumer.
It makes a lot of sense. So, what do you see as the opportunities in this market? So, if I'm an entrepreneur and I want to build a startup in the age tech space, what sort of problems would you suggest that I look into?
I would suggest looking at it from a full stack manner, right? Let's say if you're targeting the well off people, then you can rely on the community and the network effects of the community to kick in and let's say add a level of tourism or concierge to it, right? But otherwise, it makes sense to go full stack and give a physical center where elders can come, get their vitals checked, so on and so forth, right? A non intrusive device, for example, that stays at home. Because what our research suggests is that let's say once an elder in the family has a fall, that's when their health significantly deteriorates. So, is there a non intrusive way to track whether there's a fall, right? Like you can always prevent falls by having fixtures and railings and stuff. But let's say if you could monitor it in a non-intrusive manner via sensors in a room, then the game sort of changes. So these
Yeah,
three areas predominantly.
and one thing that I also saw that you mentioned in the report is that you have identified areas in which the willingness to spend is higher. For example,
Yeah.
nutrition and senior homes and insurance. Can you share a bit about that and what sorts of specific problems maybe you've identified in these markets that startups can go after?
Look, we are also exploring with respect to nutrition, right? Because it's so personal. Like, I might have a particular vitamin deficiency which you wouldn't, or my parents might have a particular vitamin deficiency, or any other deficiency that your parents might not. So, it's good to serve all the use cases that exist. With respect to insurance, how do I put it? It's a product that has existed for more than like at least 50 to 60 years in India, right? So there's not a lot of innovation that you could do. Where there could be a digital edge is with respect to underwriting risk. Let's say if you could monitor health data, then you can help insurers underwrite risk better and offer better premiums for elderly. Right? Let's say if I have an Apple Watch which monitors my heart rate, then hypothetically, I could tell my insurer that, hey, look, take access to my Apple Health. Obviously, there has to be an opt in for privacy reasons, but you could use that to underwrite your risk better, offer me lower premiums, right? So on and so forth. Like it happens with medical health checkups where they check for your lungs, the health of your lungs, your heart, so on and so forth, and then determine what your annual insurance premium should be like. Now, could you use it on a continuity basis? We are yet to find out, but that could be an interesting space that emerges.
For sure. And do you see any differences between, let's say, the Indian market and other markets? Like, what are there any specific opportunities or characteristics that are unique and can only be found in India?
The most unique characteristic that you find in India is the guilt of not being around your parents, especially if you're well off and living away from them. I don't think it exists in other countries as much. Like I've had friends from other countries, and I would ask them that, "Hey, would you take care of your parents physically and emotionally?" Everyone says, "Yeah, emotionally for sure, physically not so much." But in India, by default, you're expected to take care of your parents by being around them too, which is what makes it a little more unique. In fact, putting your parents in a facility for senior citizens, there's still some amount of social stigma associated with putting your parents in a facility like that.
It makes a lot of sense. Thank you so much for sharing that insight, Marmik. I wonder if this guilt actually drives the children of these older adults to be more proactive in searching for solutions for them and maybe buying more solutions for them.
Correct. Correct. It is true. It is true. Right. Like, I think in Western markets or other markets, the elderly people take their own decisions. Even over here, there's a certain segment of Indians where the elderly take their own decisions, but it's mostly kids. Like maybe 10 years later, things would change.
Got it. So at this point, I would like to take a crystal ball and ask you to try to predict the future. Where do you
Oh,
see this market in 5 or 10 or 15 years? What do you see as new companies that are emerging? Do you see any companies currently in the market that you think will dominate the market in the future?
If I had to put a crystal ball, I wouldn't name a company per se because that would be unfair to anyone else who's building right now. But if I had to think, then I think concierges can take off really well. The reason I feel concierges can take off really well is because the affluent Indians always have a house help. Most of them have even the non-affluent ones might have a part-time house help, right? So everyone's used to someone taking care of your day-to-day life, right? So what if there's just like a virtual concierge who's available on demand, like how a lot of US companies or companies around the world employ remote assistants, right? So what does a good remote assistant for elderly look like? Someone who takes care of their medicines, asks them, hey, have you taken this medicine or not? Someone who helps track vitals, not just like, hey, did you charge your watch? Which also is a monitoring device for you, so on and so forth, and gets random stuff done, like going to the bank, going to an insurer, getting their wills vetted, so on and so forth, right? So that is one place where I think something would come up. It is very digital as well as physical, right? Because digitally you could have a CRM which maintains or which can be used for ticketing, whereas an individual does the tasks physically, right? And there's a very high gap, which is also very India specific, between how much a user would pay and how much it would actually cost you. Like the minimum wage in India is not that high, right? Which improves margins for companies significantly.
Yeah, it makes a lot of sense because these types of services in Western markets can be very expensive. So it makes a lot of sense that this type of service would actually take off in a market like India, where, like you said, the minimum wage is not that high, and people who are WOOPWHIs can certainly afford the service. So, Marmik, is there anything else you would like to add and share with our audience, which is a lot of startups and a lot of maybe inspiring entrepreneurs who are seeking for their next adventure?
One thing that I would like to leave listeners with is the framework to narrow down the ICP, where we put people into a 2 by 2 matrix, right? Standard consultant stuff, where we segregated users with respect to their health, which is good and poor, and financial security, right? With respect to people being financially insecure or financially secure, right? So we feel that users who are financially secure and have poor health would obviously would treat a full stack service with a higher importance, right? Whereas let's say someone who's financially secure and has good health might take a community or travel with a higher importance, right? And let's say someone who's financially insecure but good health is probably an area or a demographic where a lot of revenue pool doesn't exist because there's a lower paying capacity. Financially insecure and poor health, and financially insecure good health are just silver strivers to us, right? Like they'll get by.
Thank you so much for sharing your views with us and insights and joining me on the show, Marmik. It was an absolute pleasure meeting you and having this discussion with you. I will put a link to the Eldercare Blueprint in the show notes. And thank you so much for joining me, Marmik.
Yeah. Thanks for having me, Karen.
Thank you for watching this episode of the AgeTech Podcast. If you enjoyed it, make sure to hit the like, subscribe, and get notification buttons so you can get a notification whenever we publish a new episode. Until next time, stay humble, stay curious,